Now, the missing submersible carries a pilot and 4 crew members to a maximum depth of 4,000 meters. Coming up, thinking of moving abroad? Well, Monocle magazine has revealed its top cities for quality of life. We'll bring you the details next, and this is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has 2 targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, for those of you looking to move abroad, Monocle has released its Quality of Life survey. With low crime and excellent transport system, Vienna holds the top spot. Now, all of the top 5 cities for quality of life are in fact in Europe. Now, joining us now is Tyler Brule, editorial director and chairman of Monocle. Tyler, make us dream. So it's Vienna, but how surprising is it that it's European cities that come up on top?
Good morning, Francine. Not so surprising, because we've discussed this over the years. One of the things that many European cities benefit from is that they were planned, they were developed, the infrastructure went in maybe at the right time. They were built right the first time. So Vienna, of course, once recognized as one of the capitals of Europe, maybe not surprised that it had all of the elements in place, the tram networks, when the metro was developed, the airport as well. All of this, of course, serves the city in a very good way. Not to mention, much of quality of life is about the quality of housing stock, the neighborhoods, all of these things. So that's one of the reasons why Vienna came out on top. But you mentioned those top 5 cities. It's a super tight race because Munich also doing a great job. Zurich also doing a fantastic job as well. Maybe Stockholm, number 5, could have been a little bit higher. And one of the things we look at this year is the issue of violent crime. And that's one of the striking things, because it's the first time since we launched this in 2007 that no U.S., or actually no North American city, has made it into the top 20.
Yeah, and this year there was a special focus that you put on, of course, on security. Does that change? I mean, I was surprised, for example, that Vienna, number 7 last year, now number 1. Munich, number 11 last year, now number 3. So how much efforts can actually city make?
revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Global stocks decline as U.S. markets wake up from a long weekend. Concerns over the weekend then expected stimulus out of China weigh on investor sentiment. Thawing tensions, U.S. State Secretary Antony Blinken's meeting with Chinese President Xi Jinping restores communications between the two countries after months of heightened tensions. Both sides vow to continue with more high-level visits to come. And UBS is reportedly facing hundreds of millions of dollars in penalties over Credit Suisse's dealings with Archegos Capital. Imposed fines may come from U.S. and U.K. regulators, according to Bloomberg reporting. Welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London with Kriti Gupta in New York. Kriti, so great to join the Early Edition team and joining when the talk of the town is, are we in a new U.S. bull market?
Yeah, day one for Danny Berger. We're excited to have you. I think you completely nailed it here. Are we in a new bull market? Yet we're still dealing with a lot of concerns. There's still a lot of doom and gloom out there. And Danny, of course, we get paid in the media to really accelerate that doom and gloom, if you will. You are seeing it from the Federal Reserve. You're seeing it from geopolitics. You're also seeing it from China, which is, I think, where you are expecting to see a little bit more of the market read through. I'm going to start from the bottom up here. For our radio audience, stick with me. Overnight, we saw the Hang Seng Index drop by about 1.5%. Essentially, you hit it, Danny. This idea that the Chinese stimulus that a lot of people were expecting did not come through to the same extent that they really wanted. And that is weighing on sentiment around the world. You are seeing futures as a result down about 0.4%. But remember, geopolitics is baked in there as well. U.S. and Chinese kind of government officials meeting over the weekend. Some are saying that there's progress. Others are saying not so much. Anyways, regardless, the lack of progress perhaps is also going to be weighing on sentiment. But then you have to factor in the bond market, the Federal Reserve. Remember, a lot of these bets on more of a hawkish Federal Reserve are kind of ramping up, which brings me to the two-year yield of about 4.72, unchanged at the moment. But really keep an eye on this one because it's getting closer and closer to that 5% terminal rate on the front end of the curve, which tells you that as you start to see some of these hawkish bets getting priced in further and further into the year, the two-year yield is probably going to get higher and higher. And again, we are seeing it creep in that direction. Also worth noting that around the world, you're seeing a similar story, this conversation between hiking and pausing. Overnight, Danny, we also got a message from the RBA. They released their minutes and essentially revealed that, well, there was a conversation about pausing instead of hiking. And remember, 2 weeks ago, we saw the RBA and the Bank of Canada kind of make waves by making those hawkish bets. But apparently, a pause was on the table. Nevertheless, that pushing the Aussie dollar down by 0.8% against the greenback. It is the biggest weight on the Bloomberg Dollar Index at the moment, which at the moment is unchanged, Danny.
And we are looking at another negative day here in Europe. Kriti, yesterday we didn't have that impulse from the U.S. Open to lift European equities. That's a lot of times what we see. It's a negative session in China, a negative session in Europe until the U.S. comes online. Will that change today? For now, again, we're just kind of drifting lower. It's some of the cyclicals that are doing the worst. The DAX, the most red of the regions, that's down 0.7%. It's things like chemical companies, autos. Again, really economically exposed type sectors are the ones that are doing more poorly. So if you look at the overall headline index, we are moving lower on the stock 600. So let's flip up the boards and take a look at that, down 0.4%. It was a better day for Telecom Italia. It's given up some of its gains. Finally, it's going to be getting likely, according to reports, exclusive conversations with KKR about taking over its network operations. This has been such a long deal. Are we finally getting to the end of it after KKR upped its bid? The real drama yesterday was in the front end of the UK curve. This thing has moved 160 basis points in the past quarter. That's only happened one other time in history in the past, or at least since as long as we have data, 3 decades back. We're coming in a little bit today, but we're still solidly above 5%, a level we haven't seen since 2008. And finally, it's a divide between the hawks and the bulls over at the ECB. Schnabel at a conference saying that they want to err on the side of doing too much rather than too little. Lane, who of course is a dove, saying, look, it's way too soon to be talking about September. We've already done a lot of hikes. But for now in the market, the hawks are winning out, a stronger euro versus the dollar today, Critty.
Certainly something you're going to be keeping an eye on, because at the end of the day, central banking is at the core of the trade around the world, which brings us to the Asian story. Chinese banks disappointed investors with a modest cut to its 5-year rate after some economists predicted a bigger reduction. Joining us now for more is Bloomberg's Ksenia Galushko. Ksenia, this expectation of Chinese stimulus is so important because going back to the global financial crisis, that stimulus from China helped the rest of the world. Talk to us about why this time we didn't get that stimulus.
That's right. So today's reduction in rates came in as a disappointment to market players. Some economists had actually predicted a 15 basis point cut, but that did not occur. And again, with a slowdown in China's recovery, which at first proved to be quite strong at the end of last year, fueling a global equity recovery, especially in Europe, this now is showing signals of slowing down. So the economic recovery is really stumbling in China, creating concerns for global markets.
So if we don't have China that can lead the push higher in global equities, what can at this point, Ksenia?
At this point, it's actually quite interesting. So yes, we had disappointing news out of China this morning, but actually U.S. equity futures and European stocks are actually not doing too badly. Yes, we started off on a weaker note this morning, but then equities very quickly erased those losses. And the main reason is that equity investors are actually much more focused on profit growth and also on the Fed and ECB signals, which are saying that they will pause the rate hikes and they will continue to exert more stimulus on the market as the economic recessionary headwinds are growing. At the same time, this China slowdown is a big concern for luxury stocks in Europe, because in Europe, the recovery has been led by these major luxury companies like LVMH, Kering. And if the China slowdown continues, if the consumer demand there continues to be weaker, that is going to be a major concern for European stocks.
Certainly something that is going to have those ripple effects throughout the markets around the world. Bloomberg's Ksenia Galushko all over that story. We thank you as always. And sticking with the China story, U.S.-China relations moving past months of icy tensions as State Secretary Blinken's visit to Beijing opens up paths for further communication. Joining us now to break it all down, Bloomberg's Beijing Bureau Chief John Liu. John, talk to us about how these talks actually went. If you look at the readouts from the U.S. and from China, one is far more friendly than the other. What should we know about what happened this weekend?
I think the most important thing to know about what happened is that Secretary Blinken actually came. I don't think there's anything in this relationship you can take for granted at this point. Secretary Blinken was supposed to come in February. He didn't make it because of the spy balloon. He came. He had a 7+ hour talk with the Chinese Foreign Minister Qin Gang. He met with China's top foreign policy official Wang Yi, and he met with Xi Jinping. And so this is the highest level visit from a U.S. official that we've had in 5 years. Maybe they could have gotten military to military talks, which Washington had wanted. But even without that, we didn't get that announcement. Even without that, I think there is some level of success just by the fact that it happened.
So what now, John? Is it setting the stage for a Xi-Biden meeting?
Well, there's obviously going to be more talks. Chinese Foreign Minister Qin Gang has been invited to Washington. He's accepted. We're expecting Secretary Yellen, John Kerry, among others, to come to Beijing soon. And as you point out, a Xi-Biden meeting, maybe at G20 in September, is something we're all looking out for. All setting up for Xi to visit the United States in November when the U.S. hosts APEC. But as all of that is happening, you're going to still have these two countries wrestling with each other. We have the Chinese premier in Germany today telling business leaders that if there is going to be de-risking, it should be led by corporations. There's going to be continued efforts to increase influence on both sides. And so lots of tension still, even as talks continue.
Okay, John, thank you very much for the update there. Beijing Bureau Chief John Liu. Now, Bloomberg has learned that UBS faces hundreds of millions of dollars in penalties following investigations by several regulators into Credit Suisse's dealings with Archegos Capital. Joining us now on this is JP Barnett. JP, it honestly feels like this was a decade ago. Of course, Archegos, a lot has happened, but it's not that long ago. How bad is this for UBS to be facing these fines?
Well, it actually does feel like a decade ago. You're absolutely right there. But I think it's because we have talked about it so much that it really feels like an old story. But I mean, like, I would say it's not too bad for UBS. Of course, it's not looking great, but everybody knew that UBS will inherit all the issues that Credit Suisse, and that is the main reason why UBS got Credit Suisse on a rather cheap price. I mean, let's not forget that they only paid a couple of millions for the bank that was worth more than 15 billion Swiss francs just like a couple of months ago. So from a financial perspective, this is not something that the top executives at UBS will have sleepless nights over. The bigger question for investors, I guess, is like, how much else is there in the books of Credit Suisse? And as it comes to litigation costs and expenses, you only can estimate them so far, and then you have to see what's next. And these unknowns are never great for a stock going forward. And I guess it will be an ongoing and repeated topic on the upcoming earnings calls for UBS to give color on how these matters will be solved as quickly as possible.
Well, how does UBS deal with something like that? What are the options that are even on the table at a time when, to your point, they're already absorbing a lot of these costs from Credit Suisse? Do we have to see it in deal volume, perhaps?
Yeah, absolutely. I mean, UBS has to do two things, and both, I would say, have to happen rather fast. We know it's a complicated merger, and we can't like put too much time pressure on them. But I guess like the idea for the top executives at UBS is to deal with those pressing issues first to get investors at ease. And the last messages that we saw coming out of UBS go in that direction. So with all the litigation stuff, I would expect them that they sit down with the regulator rather today than tomorrow, basically, and talk out, okay, what's the fine going to be? How can we settle this as quickly as possible? And then the matter is off the table, and then they can focus on the really tough stuff, which is the operating business, and to align that and to merge all the systems and the employees and the clients and so on and so forth. So that would be my guess. Take those litigations. I mean, you have to deal with them anyway. And as long as the number that is at the end on the bill is acceptable, they will do everything they can, I guess, to not have this issue on the agenda every single earnings call.
Yeah, certainly. And of course, then attention will certainly turn to what sort of job cuts we're going to be looking at after Amadi's opinion piece over the weekend. JP, thank you so much for that. That's Bloomberg's Jan Patrick Barnett. Now, coming up, we're going to speak to Steve Sang, director of the SOAS China Institute, on the outlook for U.S.-China relations following the Blinken visit. And we're going to catch up with J.P. Morgan's Madison Fowler on whether the stock market is set up for a second quarter rally. Is the bull market really here? Plus, Harry Colvin, senior market strategist at Longview Economics, will join us to push ahead to the BOE decision. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that pandemic will be behind us in some way, do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000, 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Progress is hard. It takes time, and it's not the product of one visit, one trip, one conversation. My hope and expectation is we will have better communications, better engagement going forward. That's certainly not going to solve every problem between us, far from it. But it is critical to doing what we both agree is necessary, and that is responsibly managing the relationship. It's in the interest of the United States to do that. It's in the interest of China to do that. It's in the interest of the world.
That was Secretary of State Anthony Blinken during his two-day trip to Beijing. The secretary there speaking simply about the progress that they are making in terms of really kind of making those icy tensions just a little less icy, or thawing at least. Joining us now, Steve Tsang, director of the SOAS China Institute, joins us with a little bit more perspective. Steve, if you look at the readouts from these two sides of these meetings, there wasn't exactly any signs that they were on the same page. It feels like the U.S. readout signaled far more progress than the China side did. What was your initial take?
Well, what struck me very much was the mature approach towards diplomacy that Blinken and the Americans have taken, and the mix of a element of maturity and element of juvenile behavior on the part of the Chinese leadership, because the Chinese were much more focused on the posturing, the lecturing of the Americans to Blinken. I mean, it's very clear from Xi Jinping's meeting with Blinken that it was mostly Xi Jinping talking and Blinken listening. For all that, the Chinese really wanted the Americans to retract from the American position before they even wanted to talk to the Chinese. Blinken has managed to use diplomacy the way that diplomacy was meant to be used, to re-establish high-level dialogue. That's really all that has been achieved, but it is not a mean achievement given the attitude of the Chinese government at the moment.
Well, how does the Chinese government then approach things like perhaps a little bit more iciness from the Biden administration, tariffs that still haven't been removed yet, relative to some of the reception or some of the attention that they're getting from corporate CEOs, the likes of Elon Musk, Jamie Dimon, and others? How is that received?
Well, that's a classic Chinese united front approach, which is that they engage as widely as they can in order to divide the other side that's being engaged, to isolate the U.S. administration and get U.S. Big businesses to lobby on their behalf against the U.S. government, for the U.S. government to change their policy. I mean, what came through in this visit is that Blinken has not made any concessions on those big issues that the United States is interested in and concerned about. And yet he still managed to have that talks all the way to with Xi Jinping.
That is so fascinating, because we've heard similar language from the Chinese premier about Germany, saying that it should be the German CEOs that take on the de-risking charge, not the government. Has that approach worked? I mean, as Kriti mentioned, you have had all of these executives coming over to China.
Well, it is more effective than we in the West like to think. I think it was Lenin who used to say famously that with the capitalists, they will sell you the rope to hang themselves. And that is, in a sense, what they are still playing out of the playbook in terms of how they try to engage with large Western businesses to appeal to their economic business interests in order to get them to persuade their governments to ease their policies towards China so that China can get its way.
Steve, this might be a first getting a Lenin quote into the show. Okay, given all of that, and given just the fact that, look, that there are differences between the U.S. and China that are fundamental, things like Taiwan, for example, how do we measure progress in this relationship?
Well, I think the progress there is that things don't blow up. The big issue about Taiwan is that the basic U.S. positions and the basic Chinese positions are not reconcilable. China wants Taiwan. The United States position is that people in Taiwan must decide their own future, and the range of options available to people in Taiwan is something that the Chinese government does not accept, nor for that matter does the Chinese government accept that people of Taiwan have a right to decide their own future. It's a future for China to decide. So as long as they can keep that relationship on an even keel and avoid a conflict, it is a success.
Well, I'm on the Taiwan front. You've already starting to see a lot of investors hypothetically kind of pull out from investing in companies like TSMC, for example, on the threat of the China risk. Walk us through the way this is perceived from the China side as we start to see these massive investments in other parts of Asia, especially from chip companies, Japan, India. I believe Intel investing about $25 billion in Israel over the weekend, or announcing that at least. How is that interpreted from China, that the investment is going away from the mainland?
Well, the Chinese government see that as a demonstration of American hostility. They see it as the United States being the black hand, driving all these changes in order to harm China's economic well-being and innovative progress. And therefore, they do blame the Americans for it. And that is exactly why I said, in this context, Blinken being able to do what he did was not a mean achievement, because the Chinese really want
or 25 basis points hikes in the dot plot. So they want to keep going. They want to keep money super tight. We've got an inverted yield curve. We've got very tight credit conditions. And importantly, we've got a turn in the credit cycle. And therefore, we're going to increasingly see a turn in the economic cycle. So I think the stage is set for recession in the US, probably beginning later this year, if not early next year.
Well, isn't that recession then kind of priced into the market? Then talk to us about the translation into kind of the longer term thinking from the Federal Reserve as we're talking about not cutting rates for perhaps years. At least that's the phrasing from Chairman Powell. What may have them change that view?
Well, firstly, it's not priced into markets. We had the low in the equity market in the US in October. And if you look through the history of recessions, there have been 15 recessions since and including the 1929 to 31 depression. And in almost all of those, the equity market bottomed either during the recession or after it had finished. So if you want to believe we've priced it in, you have to believe that that was all done in October last year, potentially a year before the recession even started. And I'd say as well, it's not priced into the rates market, certainly not priced into the credit market. We've got high yield credit spreads trading at around 500 bips. Really, we want to see them at about 1,000 to feel like the credit market's priced recession. So that's, I think, the unique opportunity for asset allocators today, that we've got a recession coming, but it's not properly priced.
Yeah, even triple C's, I mean, the junkiest of junk bonds had a rally last week. What does the default cycle then look like in your mind?
Well, it's potentially a large one because we've got a lot of zombie companies in the US. We think there are about 10% of the listed corporate sector that are zombies. These are companies that have been unable to cover their interest expense with their EBIT for 3 consecutive years, and they're going to be struggling in higher rates. So that's the risk if you want to create a really bearish scenario. But probably it's going to be a relatively mild recession, and I say that because the US is structurally much stronger than it was, say, 10 years ago.
I mean, look, I'm still kind of getting over the fact you're saying that everyone has over-tightened. Basically, all the central banks have over-tightened. So what do we do from here? I mean, is it too late then when it comes to central bank policy? Do they need to start cutting?
I think it's too late, and they can start cutting, but I doubt it's going to make a lot of difference, which is always the case as you go into recession. They start cutting, but the recession dynamics have already started to emerge and unfold. The dominoes have started to fall, and the dynamic is at play. So, and then it takes a whole cutting cycle usually to properly stimulate the economy and cause it to reaccelerate. So I think all the tightening's in the pipeline. It's too late, and what we do is we move underweight equities and overweight bonds.
Well, Harry, then talk to us then about kind of the issuance or the deluge of issuance that we're expected to get over the next weeks and months from the Treasury. There is a question in these credit markets about just how digestible that is. Is that something that you're worried about when it comes to these credit conditions?
Absolutely. I mean, I think you've got to remember one of the key reasons we've had a very strong rally in risk assets, particularly in tech, is because we've had all this liquidity as the Treasury's been drawing down its balance, the TGA. This is its balance with the Fed. So, look, it's going to have to rebuild all of that, and it does it by issuance. We're going to get about $1.3 trillion of net new issuance by year end, and that's going to suck liquidity from markets. So this is a really key reason to be bearish on equities and other risk assets over coming months.
But, Harry, isn't the market already dealing with a liquidity story? We've been talking about these kind of credit liquidity for, I want to say, at least a year and a half before even the banking turmoil came about and before the Federal Reserve was way farther into its rate tightening cycle as it is now. Why is this liquidity warning different than the others?
Well, the liquidity warning I'm really talking about is the Treasury sucking liquidity out of financial markets. That's what I'm referring to, and that's a big problem. I think perhaps the liquidity you're talking about is the signs that we're seeing junk bonds failing. We're seeing some failures at the margin. We've had a little mini banking crisis a few months ago, and I think there'll be much more of that coming, particularly given the outlook for the credit cycle and just how tight credit conditions are in the banking system.
Harry, I feel like after this conversation, I need to go into my portfolio base of changes.
Yes.
Harry, I'm afraid that's all we have time for. Thank you so much for joining Harry Colvin there, Director and Senior Market Strategist at Longview Economics. Now, coming up, we're going to take a look at some of the market-moving events you need to be watching out for this week. This is Bloomberg.
So what is the best investment advice anybody's ever given you?
You don't need to have a good idea every day. So there's times to be patient and there's time to press.
What do you think is the most common mistake that investors make, the average investor?
I think it's FOMO. So buy high, sell low. You know, and the amount of damage that does the average investor is big.
Let's suppose I have an extra $100,000. What would you say that person should do with $100,000? To put it in an index fund or something else like that?
Yeah, I mean, I think for the average investor, buying an index, but buying and holding and just letting it compound is really sensible advice. I think the more trading someone tries to do, the more damage they tend to do.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now let's get a quick look at what's ahead this week. We're going to be hearing from Fed Presidents Bullard and Williams later today. And then we're going to get the latest inflation print out of the UK on Wednesday. The data has been hot. Plus, it's a busy day on Capitol Hill, Chair Powell's congressional testimony, and a Fed nomination hearing. And then a Bank of England rate decision coming on Thursday. Bloomberg Economics says if they go to 6% this year, we're going to get a recession. And then finally, rounding out the week, we're going to get PMI data from the U.S., UK, and Europe on Friday. But Kriti, just this week with Bullard and Williams, I mean, those are two central bank speakers, two Fed speakers known to be a bit more on the hawkish side. If you're Harry Colvin, who we're just speaking to, he's probably going to be cringing watching them because he says the Fed has already done too much and they should be cutting.
And we know, of course, James Bullard, to your point, yes, very hawkish, but also kind of known as almost front-running what the Federal Reserve can do. So markets very sensitive to what comes out of his mouth. But Danny, I got to say, the BOE really in focus, I think, even stateside, more so than usual, simply because we've had this deluge of central bank decisions that have really surprised to the upside, the Federal Reserve notwithstanding. I wonder what kind of precedent the BOE sets here.
Yeah, and look, when we talk about long and variable lags, presumably those are shorter in the UK just because of the state of mortgages here, the fact that they're usually around a 2-year mortgage, not like 30-year of what you have going on in the US. So if inflation isn't yet coming down, how long are the lags really? Do they need a hike more? And do they risk really doing some damage to this UK economy?
I'm glad you brought up the housing piece of the equation because, of course, there's that structural difference between the U.S. and the UK. But something that stood out to me in Chairman Powell's last press conference was when he talked about the housing market. He actually said, look, some of these shelter costs, they're coming down, but he thinks they're bottoming out. He's actually preparing himself for perhaps another leg of prices getting higher, reversing perhaps some of the softening that we've seen in the housing market, which, if you're worried about inflation being led by those shelter costs, that isn't exactly a good sign from the chairman of the Federal Reserve. So, Danny, that's something that's kind of on my watch list there.
Oh, I got to buy a house in New York at some point. This is not good news for me, Kriti. Do you have anything else to cheer me up this morning?
You, me, and everyone. I think we all wanted a little bit of New York City real estate. I don't have anything to cheer you up, but I do have some pre-market movers that I want to put on our radar here. A story that's coming from the other side of the Pacific, I should say. Alibaba specifically, seeing a little bit of a shakeup in their leadership. Shares down about 2.4% when you look at their ADRs here, naming a new chairman, replacing their old one. Now, essentially the idea here is that although that is a shakeup that kind of favors one of Jack Ma's kind of close confidant, a lot of the street is saying, look, we got to see the growth first before we really kind of install a good chunk of confidence in this new restructuring.
Yeah, we're in the post-tech crackdown era in China, which, as you say, has been difficult for Alibaba.
It really has, and it's not just Alibaba alone. Then you go to around the world to other tech companies really kind of butting heads with the respective governments, which brings me to Adobe shares down about 1.3% in the pre-market. Also taking a hit this time, the FT reporting that the EU is preparing to launch an antitrust probe with the Adobe Figma deal. It's about a $20 billion deal set to take place later this year. And again, the European Union coming out very aggressively with those tech concerns.
Yep. Of course, the one right before this was Google being hit with an EU charge over its tech dominance. So, the EU leading the way here when it comes to some of this regulation.
They're leading the way in regulation, but Europe is also leading the way, I want to say, in kind of innovation and diversifying a little bit. Stellantis is a great example this morning. STLA is your ticker. Their shares actually down 2.8% as well. Sentiment is not great, we should say, on both sides of the Atlantic on the micro front. But essentially, they're partnering with Foxconn, which we know as the major chip supplier to Apple, to create kind of a semiconductors company. This would be kind of based in Netherlands, but really trying to amp up their exposure to the auto space and how they can kind of enter the future when it comes to the auto story, Danny.
There's a lot going on with chip manufacturing right now. Intel yesterday announcing they were going to get some German subsidies and going to open up a plant there. So they're spending more. It's everyone trying to chip away. Oops, I actually did not mean to make that pun, but chip away at some of these supply chain issues.
Yeah,
that was bad.
No, it's okay. It's an appropriate pun, I think, for 5:55 in the morning, New York time. I also just got to very quickly put on your radar, Danny. We do have FedEx reporting after the bell. So we've seen a lot of tech-heavy stories right now, down about 0.2%. But at the end of the day, we are going to be looking out for those earnings and seeing just how much margin improvement they have given their own restructuring.
Yep, absolutely. A pandemic darling. Is everyone still ordering stuff online? I think the answer is probably yes. Anyway, that's it for Early Edition. It was great to be with you today, Critty, and to join you on surveillance. And still surveillance, more is ahead. They're going to be speaking to Brown Brothers Harriman and JP Morgan.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
This is Bloomberg.
I really feel the markets are kind of getting divorced from the Fed.
The issue really is the lagged effects of policy.
I think that the Fed is going to have to continue to raise rates or stay higher for longer. The market is not pricing that in.
There are extremely few historical examples of the Fed hiking, pausing, and then resuming hiking.
I think the Fed has to sleep with one eye open well into the future because the economy has changed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on Tuesday, 4-day work week on radio, on television. Farrow on assignment, one of 3 islands, somewhere warmer, better, prettier, cooler, fancy.
How do you get one of those assignments?
I don't know. I'm looking for that. I'm looking for that assignment. Anyways, John's on a wonderful assignment. We're with you today. A really interesting day, to say the least. We've got a lot to talk about. Markets. Ben Laidler will start us off here on the equity market. It's not an equity-centric show, but we're really going to look at the stock market. And Lisa, with the futures negative 19, a little bit of a pullback. The single best sentence I heard in global Wall Street literature this week was this weekend, rather. Everybody publishing was Stuart Kaiser. It's Citigroup. Yet here we are, and boy, is that the feeling of the bulls and the bears. It's like after the Fed. Yet here we are.
And even though it seems like perhaps the FOMO trade feels a bit frothy, there still isn't necessarily anything to pull it lower. And that was what Stuart Kaiser's point was. He doesn't really see any obstacle for it to be going even higher. So I'm wondering, are we there yet at the point where bears have fully capitulated and we've gotten a more balanced? Okay, well, that's sort of the key question right now. Have we gotten a bit over the skis with the AI trade, or does it have legs that can keep going regardless of what the Fed does?
Or could it be something else? And that'll be our theme here through the morning. Again, Ben Laidler, who's a confirmed bull, will join us here in a moment. Across all of the data, it's sort of a churning market here. Of course, we saw the Secretary of State in China. That was a drama over our long weekend, and it seemed to be constructive to get to more talks.
It was constructive, although a lot of questions around the substance, especially as lawmakers head to Detroit to question Ford and GM around supply chains and resilience, this whole idea of not decoupling, but sort of making supply chains more resilient. How do you parse that out at a time of such incredible competition between the two nations?
Soccer Talk with John Farrow, we can do that, where it's petrodollars buying into English football, among other things, and the FT had it. Bloomberg has it this morning as well. But the Financial Times, Arash Massoudi and Simeon Kerr reporting. This is really interesting to me. Abu Dhabi, they're the rich ones with oil, looking at Peter Orszag's Lazard. And, of course, they walked away from the deal. But nevertheless, you wonder if that's the future here of global Wall Street.
There was also a story about Canaccord. There's this pressure right now on investment banks, which is basically revenues are going really down. There aren't the same kind of deals that there were, say, pre-pandemic and as they were last year. So at this point, how do you move forward at a time of such competitive pressure, margin pressures, competition, and some of these smaller boutique investment firms looking for perhaps not only job cuts, which Lazard did announce back in April,
10%.
but also some sort of perhaps cash infusion.
And what's interesting to me, folks, this is really important, is the calendar of discussion. Lisa, I think we're having an end of June here. October discussions is how I'd put it. And it's underscored by, at least the interest of Abu Dhabi, the ADQ Wealth Fund with Lazard as well. So that'll be some of the themes we'll look for into July. We're going to do a brief right now. It's going to be a brief, but probably it centers around 400 Fed speakers between now and Friday.
There are a lot of Fed speakers, and perhaps they take on new importance after Jay Powell said, listen to what they have to say, not what I have to say. 8:30 a.m., the data dump, U.S. building permits, U.S. housing starts for May, and the Philly Fed non-manufacturing activity, also the economic indicator of FedEx earnings after the bell, which always is going to be interesting. I'm watching housing building permits because it gives you a sense of how much of a recovery and how much demand really is picking up in this sector. To your point, Tom, Fed Speak today includes in a half an hour. St. Louis Fed President Jim Bullard, he's in Barcelona, also evidently on assignment. 11:45 a.m., Fed Vice Chair for Supervision Michael Barr and New York Fed President John Williams are speaking at the Governance and Culture Reform Conference of the Federal Reserve. Very curious to hear what they have to say about banks there.
And sometimes they speak there and they talk about banking, but they talk about things away from monetary policy. But I would really like to hear John Williams of the New York Fed reaffirm his belief in a low R-starred. Because the zeitgeist I'm getting, including from Jerome Powell, is maybe the lower R-starred is a higher R-starred. That would be the key thing today for me.
That the end rates that we will end up with end up being significantly higher than they have been in the past. It's a real key existential question underpinning the market. And today, on the China front, Tom, to your point, German Chancellor Olaf Scholz is hosting Chinese Premier Li Qiang in Berlin. That's at the same time that 4 U.S. lawmakers head to Detroit to talk with Ford and General Motors CEOs about perhaps moving supply chains away from China, particularly having to do with electric vehicles.
Yeah.
I just am curious how this tension evolves if you have the sort of diplomats coming out trying to make peace, but the political rhetoric is such that you are moving toward a more hawkish kind of feel, regardless of what the diplomats say.
All I can remember is John Lawler, the CFO of Ford, visited with us here a few days ago, folks, and he said, basically, we can't make enough Broncos. You know, it was just that simple. They can't make enough of the fancy car. Thanks, Liz Ann Saunders, for sending in a photo of her gorgeous antique Bronco. So she was born after the Bronco. She doesn't remember that stuff, but she has like out of Hollywood, you know, the big tires, and it's a manly car.
Are you jealous?
Liz Ann, very jealous, say the least. Futures negative 18, Dow futures at negative 130. The VIX 14.54 after the 13 print, showing the state of this bull market. I need to mention BitDog, 27,000 here. Let's make it 26,700. The yield space is really, really important. I'm going to go to 30-year bond. I'm not in the 4% watch, but 3.88% of the 30-year, up 3 basis points, a 10-year elevation in the 2-year as well. And that's about it as well. West Texas, $72, a little bit on oil, and currency market I can't make sense of. Maybe we'll get some help on that later. Euro dollar, 109.29 off of the Lagarde meeting last week. Let's get to it for a 4-day work week, and we start strong with Benjamin Laidler. He's global market strategist at eToro. And Ben, I look at what we've got here, and you say very simply, it is foundations firming within the bull market. What are the foundations of your belief stocks higher?
Yeah, I think this is very fundamentally driven. We've got a U.S. economy which is going to grow 2% this quarter. Recession risks are being pushed back. Earnings growth forecasts have doubled in the last 3 months. Absolutely the opposite of what I think the bears were looking for. We've had 11 straight months of falling inflation. Break-evens, 5-year break-evens are at 2.3%, which is basically exactly where the Fed wants them. Consumer inflation expectations, we saw the latest numbers on Friday from the University of Michigan survey plunging. I think this is opening up. This is doing 2 big things. This is giving companies, relieving the pressure on their profit margins. PPI is running 4 points below CPI at this point. And it's giving consumers purchasing power back. Wage growth is now running above headline CPI. So I think this is this sort of Goldilocks scenario. And then on top of that, we now have this capitulation of investor sentiment, which I think has just given us this sort of latest leg up in markets.
Have the bears, I should say, fully capitulated? You talk about how this has been driven or turbocharged by that kind of short squeeze, perhaps. Is it over?
No, I think this is the sweet spot. I mean, our sort of long-term investor sentiment index is now neutral for the first time in a year and a half, so it's a long way off positive. And this sort of capitulation, you've really only seen it happen in the last sort of couple of weeks, whether that's the AA Retail Investor Sentiment Survey, whether that's the hedge fund positioning. It's been very, very recent. This is the sweet spot of people capitulating, beginning to chase this rally higher. There'll be a point in time where we get sort of worried that it's all sort of overbaked and overdone, but this is absolutely not it.
Ben, will this rally continue to be fundamentally driven if the Fed comes through with 2 more rate hikes, as they've promised to do later this year?
So the markets are fighting the Fed, as they've frankly been doing all year. It's just a symptom of the sort of data dependence outlook that the Fed has and that investors have. I think the incentives are different. I think the market is, more aware of the upside risks and is happy to maybe look through, maybe one or two more hikes. Whereas the Fed, I think, is going to be hanging on till absolutely the last moment. They don't want the market to loosen financial conditions off, prematurely. And I think that's where you're getting this sort of conflict. But to answer your question, I think markets are forward-looking. They know that we're much closer to the end of this cycle than sort of we are to the beginning. And they're looking for the next chapter here, which is that, we get this relief from interest rates and we get a firming of growth expectations.
Ben, I want you to push against one of the bears out there, and you do this with such grace and character that I know you're not going to take a shot at Mike Wilson of Morgan Stanley. His core theme is we get a more rapid disinflation, and that brings nominal GDP down and revenue growth down. Not so much push against that, but simply what is your decades of experience about if you have a disinflationary tendency at the top line of income of the income statement, do you actually get a diminishment of revenue growth?
So I think that's going to happen. I probably just disagree with the magnitude, but I think there are two huge offsets here. So one I alluded to earlier, one is profit margins. Yes, you're going to get less revenue growth, but I think you're getting margin relief today. I mean, just the numbers out of Germany this morning, just to throw one number at you, producer prices in Germany in the last 8 months went from 46% to 1%. You're seeing a mini version of that in the US. That's massive relief to corporate profit margins, everywhere in the world. So that's one. That's a huge offset to less revenue growth. And two is I think this less growth will also bring lower inflation or bring lower bond yields. It'll bring lower interest rates. And I think that gives some further headroom for valuations to rise. Maybe slightly less for sort of big tech, but certainly more for, the cheaper bits of the market, whether that's sort of cyclicals in the US or, places like Europe and Japan, which have frankly been the leaders this year.
I look, Ben, at the idea here of rotation. We are all, weaned on rotation in a book. And certainly, I guess there's beginning to be a broadening and rotation in the market. But with the post-pandemic and supply and demand dynamics of the bigger picture, do we not get traditional rotation in the Laidler bull market?
Listen, I think steady as it goes. I mean, I'm very happy to stay with those sort of defensive growth names, primarily big tech and, things like healthcare, because we're not out of the woods yet. I think, we've still got to get the Fed off pause and cutting interest rates. I think we're maybe, 6 months, away from that. That for me is the real trigger for the next bull market, semantics aside about, plus 20% and all that. So I think big tech and those defensive growth stocks still have further legs. I wouldn't get sucked too far into the rotation at this point, because I think most of the growth slowdown is still to come. I don't think it's a recession. I think it's going to be fairly mild, but it is ahead of us, not behind us.
Ben Laidler, thank you so much. It's hugely valuable with eToro this morning. They're on, I guess, a cautious tone to a second leg of a bull market. That's really the heart of it. Is what shifted here, Lisa, to me is it a bull market? Is it a bear market? Has shifted to, okay, it's a bull market, but now what? And where's that second leg? And that's what we're seeing from the equity bulls out there like Stolfus, Kaiser, and Laidler.
You mentioned Mike Wilson, and I love that he said, we've been so wrong when it comes to earnings, or not the earnings, but in terms of the market's response. And so they redid all of their numbers with different parameters and really scrutinized this and came to the conclusion they're still bearish and they still see declines.
Well, bring up the full screen here on Mike Wilson that we've got, Lisa. I think we've got a full screen here this morning on Mike Wilson.
Yeah. I'll read it for you. Given our fundamental view on growth, we find it hard to get on board with the current excitement. If second half growth reaccelerates as expected, then the bullish narrative being used to support equity prices will be proven correct. If not, many investors will be in for a rude awakening, given the very big reach for risk we are seeing. I can tell you, just from personal experience, there are a lot of people that are going to shrug that off and say, he just missed it. However, there is a question. We just had the longest weekly winning streak for the NASDAQ composite going back to March 2019. We are looking at questions around whether people have priced in endless returns for the AI promise.
Abramowitz with the save. I couldn't read the screen. The camera was so damn far away from the screen, I couldn't read it. Brammo with the save there on the important Mike Wilson quote. It's a good way to start it here. 4-day work week. There's just a joy to that, isn't there? 47 Fed speakers today. Stay with us. Sebastian Page at 7.
DOJ or other authorities.
Could face bigger challenges next.
Fed was going to keep rating
World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make
A lot's happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From business's most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
My hope and expectation is we will have better communications, better engagement going forward. That's certainly not going to solve every problem between us, far from it. But it is critical to doing what we both agree is necessary, and that is responsibly managing the relationship. It's in the interest of the United States to do that. It's in the interest of China to do that. It's in the interest of the world.
The Secretary of State of the United States jump-starting things in China. Lisa, I went to Shanghai once, and we decided to live large, and we stayed at the Peace Hotel, and I had the immense honor of staying in a room. They have 5 or 6 national rooms at the Peace Hotel, the India room, the China room, which you can't get in, the government owns that. And I was in some British fake Tudor Henry VIII room. And that is the room Kissinger was in the night before they snuck to Beijing in 1970, whatever, with Nixon. Was this the same? I don't think so. But it was pretty cool. What Blinken did.
Well, this is drenched in history for sure, although he wasn't really greeted by much of anyone. There wasn't much of a reception for him.
Did you see that? Yeah.
At the airport, except for a couple red carpets that looked like red lines, perhaps. It was sort of metaphor. And there's this question going forward of whether there was anything achievable coming out of these talks other than simply not escalating, which perhaps is a victory, at least for some in and of itself.
I mean, and agree, the Secretary of State in Beijing getting off the airplane, sort of like the way Terry Haynes gets off the airplane at Reagan here, back when he's coming in from Dallas, DFW. He's founder of Pangea Policy and joins us this morning. Terry, just, the basic idea of the shock of the Secretary of State of the United States at any country being shown or greeted to the country like he's coming out of Reagan. You know what it's like. You got to get from gate 10 over to gate 3 quickly, and your luggage is on the way. What was accomplished?
And those that Reagan know the infamous Gate 35X, and that was kind of what it was there too. What was accomplished was the ability of both countries to say that they are continuing to communicate. That is calculated by both sides as having the effect of diminishing tension somewhat. I argued before the meeting and would still argue that that's largely illusory. My takeaways really are simply that China sees the United States business community as its friend, geopolitically, and will continue to try to push that relationship. That China also is pushing the United States to what they call recalibrate its relationship in Asia. In other words, kind of back off and agree that Asia should be a Chinese lake entirely, which is an absurd proposition to the many countries who are our allies there. Thirdly, there's no military communications, and fourthly, there's no mention of Ukraine or Iran for that matter. So we've got communication, but we don't have a lot of communication, and we certainly on either side don't have anything to show.
Terry, this is the political tension right now. Perhaps it was a win for President Biden in terms of not escalating any tensions further, creating some sort of open lines of communication. Was it a win when it comes to the politics domestically of a nation very much growing hawkish on China and some calling for some sort of decoupling, which this president has pushed back against?
Well, I agree that normalization of communications is a win for President Biden regardless. I think that's very true. At the same time, we don't get much more than that. Not much has been gotten. Secondly, my contention would be that the United States policy towards China actually started to flip in, say, 2016, 2017, even before Trump became president. And it is among the most bipartisan and probably the most bipartisan policy area that we've got in Washington. So that's not going to change either. The vast majority of Washington wants communication with China. The vast majority of Washington also does not want a situation where we're either getting rid of our own geopolitical interests or putting our allies in more peril as a result of that.
One of the lines
we're not doing that right now. So
one of the lines from Tony Blinken's press conference after the meeting really stuck out, at least in a lot of the talk shows over the weekend and yesterday. He said, "We remain committed to our one China policy with the 3 communiques, the Taiwan Relation Acts, the 6 assurances. We do not support Taiwan's independence. We've made it clear that we oppose any unilateral changes to the status quo by either side." Is that controversial, Terry? And how is it being sort of spun the day after?
Well, it shouldn't be controversial because what Secretary Blinken is doing there is really underscoring that United States policy since 1979 in the Taiwan Relations Act remains the policy of the United States government. And there's been a lot of concern, a lot of understanding and misunderstanding around that over the past few years. That frankly have been aided and abetted by both President Trump and President Biden in past statements. So, what what Blinken's trying to do is put a floor under that by saying, look, our policy is as it was, and it continues to be. Make no mistake about that. Clarity is good.
Jerry, I want to link this to our economics and our corporate relationships with China. Catherine Mann is at the Bank of England. She's one of the great American international economists. And Kathy Mann of MIT and Brandeis makes very clear that we have a codependency with China. We need them economically. They need us. She owns the high ground on the Trans-Pacific codependency. What is the relationship in these discussions in your Washington when they observe Tim Cook living that codependency at Apple and bipartisan presidents saying, no, we don't want to do that? How's that work?
Well, the vast majority of Washington understands the codependency, frankly, doesn't want to upset it. I find the whole war of rhetoric here, whether it's decoupling or de-risking or anything else, to be a little overblown on the street. Nobody's talking about removing Americans or American business from China. What China is trying to do simultaneously, though, is trying to attract and continue to have in American business and American investment, while at the same time making the terms under which non-China investment will exist to be more onerous than it already has been. But I don't see the United States as trying to take that away.
Terry Haynes, thank you so much. With Pangea Policy today, on this historic trip of the secretary. Lisa, I don't know where to go with this. I mean, I look at, the place I live. It's a 6-floor walk up, and down at the bottom are the boxes from everybody. And you look at the outside of the boxes. Which ones don't say made in China? I mean, very few, to be honest.
One of the offspring came home yesterday with a Nerf gun, and we quickly found out that it was also made in China. I will just say this. This is something that Tony Blinken highlighted pretty much in the forefront of his discussion, saying that de-risking is really the only logical way to go. Decoupling is not possible or even plausible, given the fact that trade in the past year has been higher than ever before between these two nations. It is not diminishing. It's quite the opposite, which is the reason why I'm curious about the business tensions. They need to stay in China. And a lot of the political tensions where it's kind of pushing back.
But you don't mention the military tensions as well. My high point of the Bloomberg Invest conference, yes, it was speaking to Nassim Taleb, but my high point was Anne-Marie Horton's piercing conversation with a retired admiral, Mike Rogers, about the trans-Pacific realities, and I'm talking north-south from Japan down to Singapore, and our build-out of our new Pacific Rim capability.
And I wonder how much that's also underpinning some of the discussion here, because a lot of the allies of the U.S. have said, when you have this kind of tension, mistakes happen. When you don't have the military leaders talking with one another to try to offset some sort of accident, that's when there are mistakes that can happen that could potentially be catastrophic on a military front.
Help me with a data check here. I'm looking at dollar weaker, DXY holding above a 102. I'm going to call it a resilient dollar, but nevertheless off the recent peaks. Yen doesn't go through 142. That's a big deal to me. Japan is under-discussed and very important right now. And Euro, Lisa, 109.
I'm watching just the fact that yields are creeping to the highs that we've seen since, that's just this ongoing grind higher. And to me, that's the collision course of what we're seeing with respect to the dynamism in the tech trade.
After the Fed meeting, the 210 spread, a negative 94 basis points. Fed speakers today. Coming up, perfect timing. Claudia Sahm on the Sahm roll.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. There's nothing closer than the phone in your hand.
News breaks. No one covers the world like Bloomberg.
On the AI question, what we don't really see is Apple doing a knee-jerk response and moving into the domain of generative AI.
Supporters of President Recep Tayyip Erdogan celebrating late into the night, dancing and singing.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
Bloomberg, your global business authority.
Bloomberg surveillance on a Tuesday, 4-day work week here in much of America. We welcome all of you. John Farrell, Lisa Bramwitz, and Tom Keene. John Farrell on an important assignment right now. Lisa Bramwitz and I dealing with a data check that's sort of boring and sort of churning as well. And it's sort of there. And like Lisa said correctly, yields is probably the place to go. What's credit doing? Do you still have magical corporate and high yield spreads?
Well, there had been this sort of steady grind lower, and now people are sort of reassessing whether it's gone too far. But I'm looking right now at just high yield bond spreads, and they're at the narrowest going back again to right before some of the banking concerns started up again. I would say that there is something interesting in the data this morning, which is there is a more marked, more pronounced direction lower in stocks for the first time in quite a while. And this comes after a really long run, 8 straight weekly gains on the NASDAQ. Is this a pause? If it's a pause, is there a reassessing going on? Even to Ben Laidler's point, how much more does another leg of the bull market have? If it is just a singular development in a cohort of stocks and not necessarily more uniform.
To give you an idea, folks, and I'm not going to show this on TV because on radio people would drive off the road, but to Lisa's really, really important question, on the Standard & Poor's 500 on a percentage change from where we are right now, the center tendency is about a 4% pullback, and we're nowhere near that right now. Just, there's some quick math you can do on this. And what this means is there's been a moonshot really since the last week of May, I'm going to say, a moonshot from 4,100 up to 4,400, one of our themes through the morning. This is a joy. It's a joy always to speak to Claudia Sahm. She's founder of Sahm Consulting, Bloomberg Opinion columnist, and former Federal Reserve economist. But far more, when you're that young and you come out of Michigan and you're codified with a rule in your name, there's very few people in the economics game that can say that. Claudia, where did the Sahm rule come from? Was that a paper you did in your spare time on a trip to Europe and said, I think I'm going to come up with a rule? How did the Sahm rule get invented?
The reason the Sahm rule exists is it was part of a policy proposal I had to automatically send out stimulus
happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money, we made our shareholders a lot of money. More importantly, we've grown the business and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions.
That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday. 27 seconds until the opening bell. We are seeing a softer market after 8 straight weeks of gains. We are seeing S&P futures leading the charge lower, down about 0.4%, the same as the Russell, with a little bit lower of a gain for the NASDAQ 100. In bonds, no drama ahead of what we're expecting to see. From Fed Chair Jay Powell, we are seeing yields marginally higher at the front end, lower on the long end as people chart out the fight for the Fed to bring down inflation. 3.74% on the 10-year. Crude is lower by just a touch, 1.2%, $70.95 traded on the NYMEX. And a bit of dollar strength, but this has been bouncing around all morning versus the euro after a pretty big week last week in terms of euro gains. What we are seeing is one stock at the open, Alibaba, the Chinese e-commerce giant, seeing a C-suite shakeup. Analysts at Forsyth Bar Asia writing that the mood brings, quote, old management back to the stage, saying, quote, not sure whether it is a good thing for Alibaba, given now the key should be new growth drivers and the restructuring plan. Abigail Doolittle is back with us. Abby, what's the latest?
Well, Lisa, investors seem to agree with that uncertainty because the stock is down despite the fact that we have this announcement. Now, of course, we've all known for months that the company is planning on breaking itself into 6 different pieces, including the cloud and other pieces, hoping to juice growth and profitability. This stock now down more than 70% since its peak back in late, I believe it was 2021. And that was, of course, when Jack Ma went into hiding in Beijing, all of the tech regulations there. But the question is whether or not the new chairman, Joseph Tsai, a longtime confidant of billionaire co-founder Jack Ma, can bring the growth and the profitability desired. And in terms of these different companies, spinning out 5 could, in fact, IPO. But with the stock's reaction being down, it seems as though investors are not clear that the path forward is clear. It will be an interesting one to continue to watch, Lisa.
Thank you so much, Abby. Let's take a look at retail, particularly Nike. Shares falling from a warning after Morgan Stanley said there are concerns about inventory problems. The analysts writing that slowing demand has left a, quote, sizable inventory glut across the industry that is currently being promoted away. Let's get a sense of that. Turning to aviation, Boeing, just one of the many names making moves at the Paris Air Show. The company signing a firm order with Air Algérie for 8 737 MAX 9 aircraft. Meanwhile, Boeing says it's prepping to accelerate 737 production soon after a recent supplier issue slowed deliveries. Katie Greifeld joining us with more. Katie.
So this is the first firm order announcement for Boeing at this year's Paris Air Show. Of course, the order is for 8 737 MAX 9 aircrafts, in addition to 2 converted 737 flights. And of course, these are 2 companies that have worked together since the 1970s. I'm not quite sure if I can nail the pronunciation here, but Air Algérie is also considering wide-body purchases to expand in the future. So some good news finally for Boeing at this Paris Air Show. And it's not just the airline, of course. You also had aircraft leasing company Avalon announced today an order for 40 737 MAX airplanes. That's its first 737 MAX order since 2017, so a long time coming there. Boeing shares not moving too much today, down slightly less than 1%. This is a company that is up 60% over the past year, Lisa.
Katie, thank you so much. Turning to the automakers, EV maker Rivian joining legacy automakers like Ford and GM, signing an agreement to join Tesla's supercharger network. Ed Ludlow with more, joining us now. Ed.
Yeah, good morning, Lisa. Rivian shares up by more than 2%, pushing towards their highest level since April. It is a domino effect. Rivian signing an agreement with Tesla that would see them adopt the North American Charging Standard, or NACS standard, in production models of their current generation R1 T01S and then future generations of the R2 from 2025. In the interim, Rivian drivers will have to use an adapter, but they will have access to the Tesla supercharger network in North America, around 12,000 superchargers. Interesting, though, to see the reaction in both Rivian shares up 2.3%, Tesla slightly higher, about a percentage point. But Rivian will still continue to build out its own network of chargers, which will be based on the CCS standard. So they're doing both, going with the Tesla technology like GM and Ford, but continuing to build out their own network as well.
Ed, thank you so much. Meanwhile, FedEx set to report earnings after the close today, a key indicator, especially because it's expected to report lower earnings year over year, with investors likely focusing on guidance into the next year. Joining us with more is Kaylee Lyons. Kaylee.
Well, Lisa, yes, earnings are expected to be down 29% from the fiscal fourth quarter period a year ago to $4.87 a share, and revenue was seen falling about 7% as the demand this company enjoyed during the boom times of the pandemic has faded. Now, it is worth noting in the prior 2 quarters, FedEx has beaten expectations quite remarkably. It was 26% higher, the profit in the period in March, than expectations. So we have to keep in mind that there is the possibility of a repeat there. We'll see whether or not that is the case today. But as you alluded to, it really is going to be the forward guidance that is going to be key. How much profitability by cost cutting does this company realistically think it should capture, especially in the express business? What kind of margin expansion there could we see? That is something our own analysts here at Bloomberg Intelligence are paying special attention to. And of course, we'll also be paying attention on the call to any real commentary around the demand picture and the health of the economy. As you said, this really is a bellwether company. It's also worth noting that up to the report today, this is a stock up 35% on a year-to-date basis, and ahead of the print after the bell today. We are adding just slightly to those gains, up just about 0.25% here in the first few minutes of trading, Lisa.
Kaylee, thanks so much. This is going to be a really important indicator, especially because it is viewed as an economic bellwether. On that front, Jimmy Chang of the Rockefeller Global Family Office has been cautious in his outlook, writing, quote, "The strong risk rally since mid-March was fueled by a temporary surge in liquidity. Fundamentals have actually decelerated further during this period. Various leading indicators are still pointing to a recession later in the year, which is our base case." I'm so pleased to say Jimmy Chang of the Rockefeller Global Family Office joining us now. Jimmy, how much pushback do you get at this point when you double down on a more cautious approach?
Landing camp, so it's getting less popular of a call. But recall at the start of the year, the consensus was that the U.S. economy will probably fall into a mild recession by mid-year. That turns out to be wrong. In fact, consensus was way off on all these other calls, such as the Great Chinese Recovery, such as Europe will avoid a recession, such as banks will be strong in a rising interest rate environment, and tech will continue to be hurt by rising interest rates. All of them failed to work. So it just shows to it goes to show that consensus very often could be off the mark. And certainly at this point, I do think the optimism may be overstated.
What do you think it is to be defensive right now, Jimmy, when we're talking about the potential for duration to also sell off if people do revise upward, how sticky inflation could be?
I actually think inflation will probably surprise on the downside just looking at the money supply. As you know, M2 is in contraction for the first time since the Great Depression. Now, we know that the overall money stock is still very elevated versus the pre-pandemic level, still above trend. But I do think this continued deceleration or contraction in money supply will place pressure on inflation. And in fact, when you look at real-time indicators such as trueflation measures, it's in the twos right now, around 2.5%, coming down from about 12% a year ago. So I do think inflation is not going to be the issue. Ultimately, it's going to be the recession. And in fact, recession has been the way to slow down inflation in the past. And I think the Fed, most likely has already over-tightened.
So if you think that the Fed is already over-tightened, then why are we still seeing earnings that to some degree are surprising to the upside, and resilience in things like the housing market where we got such incredible surprises, again, to the upside earlier this morning?
Yes. Certainly on the housing side, if you look at the volume, we're down about 30% from a year ago. So there's a shortage of inventory. Certainly that's driving up new construction. So that's certainly positive to the economy. As far as earnings are concerned, people are optimistic about so-called the rising earnings expectation. When you look under the hood, what has taken up the earnings expectations were the first quarter outperformance in an environment of strong, resilient economy. Analysts actually have taken down forward earnings expectation for Q2 through Q4. And in fact, the market is still carrying a 10% earnings growth expectation for Q4. Now, if we do have a recession, I don't think we'll get anywhere close to that 10% number.
What's your view, Jimmy, of this idea that artificial intelligence can sort of take this tech sphere out of the boom-bust cycle of economics and really move it into some sort of sea change in how we do business and which companies will reign supreme? Do you just reject it? Do you think it's overplayed? Or do you think that this is something real, even if you do shift into duration and make some of these more conservative shifts on the edges?
I do believe that artificial intelligence is truly transformative. So was internet and its outlook back in 1999, and then we went through a huge correction in the early 2000s. I recall in 1999, so many companies would come up with press release. We're now an e-commerce company, and the stock will pop 10 points a day. I just looked at ChatGPT this morning for some inquiries. So is my market value higher now because I'm using AI? It is a tool. I do think it is going to be tremendously of a boost to productivity, but it will take time. Plus, the way to use AI is very different from traditional software. If you put in the same set of inputs into a traditional software program, you get the same output every single time. But with ChatGPT type of artificial intelligence, you're training it. There is an element of unpredictability. So companies need to adjust to how you train the technology to make use of it over time. It will take time.
So at that point, do you think that there's going to be sort of a catalytic event when you do have companies, the AI-driven companies, at least when it comes to their gains, come out and say that they are not necessarily seeing the earnings boosts just yet? Do you think that that's going to be sort of the tipping point in markets that have been turbocharged by that promise?
I think ultimately the tipping point for the market is the economic cycle and earnings expectations. Now, historically, we've looked at cycles going back to the 1920s. In every recessionary period, from the starting point of the recession, starting month to the market trough, on average, it drops about 28%. The median was 22%. And the reason is because earnings come down during a recession. Now, this time around, we may just be different, but I'm kind of old school. I look at the leading economic indicators. They're pointing to a recession. I look at forward indicators such as the policy, on the policy front, student debt repayment coming in the fourth quarter, late third quarter, along with potential depletion of excess savings. In fact, I would argue, if not for the excess savings, we would already be in a recession. And the San Francisco Fed estimates that we have about $500 billion of excess savings at the end of the first quarter. That came from about $2.1 trillion in the summer of 2021. So for the remainder of the year, especially during the summertime, we'll probably benefit from the use of this excess savings for vacation. People still consume quite a bit, but at some point that gets depleted. So when we look at the 1-2 punch of the student repayment coming in the fourth quarter and the potential drainage of the excess saving, down to zero, that's quite a bit of headwinds.
Just want to bring this to you before we continue our conversation. There is this breaking news coming from the New York Times and CNN saying that Hunter Biden will plead guilty to some misdemeanor tax charges.
And the Department of Justice is charging Hunter Biden with federal tax and weapons offenses. This from the Associated Press. He is expected to plead guilty to 2 minor tax crimes and admit to a gun charge. We will be talking about this coming up as we talk about some of the political headwinds domestically here in the United States. Just once again, this is the son of current President Biden. He will be charged with federal tax and weapons offenses by the Department of Justice. We're speaking with Jimmy Chang of the Rockefeller Institute and investment firm. And I'm wondering, Jimmy, from your vantage point, as we talk about some of the domestic headwinds, how do you account for it in investment theses in terms of both the election coming up, in terms of the international relations with China, and how you game out what exactly the center of gravity is going to be?
Well, I think the market has already discounted the more difficult relationship with China. And obviously, everyone's worried about potential black swan events such as an attack on Taiwan. That's obviously difficult to position for, and you don't know when that could happen. So overall, on the international relationship side, I'm actually more worried about what's happening in Ukraine. At least so far, the news flow, which has been very mixed and confusing, seems to indicate that the much anticipated spring offensive is not going well. So what does that mean to the contour of how things play out in Europe? And there's also going to be another winter. And is Europe going to get a break again from the warm weather or not? Because certainly the Russian gas flow, the natural gas is not yet flowing back, to Germany. So potentially there's some issues out there.
And so when it comes to domestic politics, Jimmy, do you basically discount it and what that is going to mean for fiscal spending heading into the next election, let alone the international picture, but really just in domestic in the United States?
I think the Biden administration, through the Inflation Reduction Act, has really loaded so much stimulus going into the election year. And I do think the House Republicans are trying to curtail some of the spending, and that's a potential budget battle later in the fall. And obviously, the election next year will be extremely contentious. And I do think in the long run, that has an impact on psychology, on valuations, because there is the sense that America is currently being mismanaged.
Jimmy Chang, thank you so much for taking the time. Coming up, China in focus as the U.S. decouples and Europe de-risks.
I think there's no way around dialogue. Dialogue is super important to do that, to get back to the table if you want. I wish sometimes, as I lived a lot in Asia, that the Germans also understand that it is not always better or worse, it's just different.
That conversation coming up next. We'll also be touching on Hunter Biden and the latest from the Department of Justice, as well as the trial date for the former President Trump. From New York, this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
and Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with 2 more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
This is Bloomberg The Open. Breaking news, the Justice Department has charged President Joe Biden's son, Hunter Biden, with federal tax and weapons offenses and will plead guilty. Bloomberg's Kaylee Lyons is back with us in Washington, D.C. Kaylee, let's just start there. What the latest charges are, what the allegations were, and what our understanding is about what he will plead.
Well, the charges, Lisa, as you said, were related to both tax and weapons violations. And we do understand, according to a court filing, that he will plead guilty to 2 misdemeanor charges related to those tax violations, not paying his taxes on time. But under this deal, he would not avoid prosecution on the separate gun charge, which was an allegation that he had lied about his drug use when purchasing a handgun. We understand, according to this court filing, that he has agreed to probation for filing his taxes late. Of course, this deal still has to be approved by the federal judge, and Hunter Biden is expected to appear at a federal court in Delaware in the coming days to enter this plea. But obviously, Lisa, this could have major implications for the re-election campaign of his father, President Joe Biden, who is currently out in California campaigning and fundraising as we speak. And on the 2024 note as well, we have to talk about the other likely frontrunner in that race, former President Donald Trump, having separate legal news of his own today. A week after his arraignment on federal charges, 37 counts related to his handling of classified documents at his Mar-a-Lago resort in Florida after leaving the White House, a trial date has now been set by a Trump-appointed judge. Judge Aileen Cannon has set that trial date for August 14th of this year, less than 2 months from now. Now, that is not set in stone. The Trump defense team could still push to delay that via different filings. But of course, the judge here is setting a pretty speedy trial date after the special counsel Jack Smith had asked for one when this indictment came down less than 2 weeks ago. And should it actually be in August, we have to keep in mind that could mean this trial is ongoing during the first presidential primary debate for the Republicans on August 23rd in Milwaukee. And we also have long expected that another potential indictment from the district attorney in Fulton County, Georgia, could also come down in August. So this morning, Lisa, legal woes mounting for former President Trump and for the current president's son as well.
Kaylee, thank you so much. In the meantime, on the international relations front, that have dovetailed into Tony Blinken, Secretary of the U.S., heading over to China. Olaf Scholz is hosting one of the key officials of the Chinese Premier, Li Qiang, and joining us now to really talk about what the ramifications and the intel is. Oliver Crook joining us now from Berlin. Ollie, what are we learning?
That's right, Lisa. So this meeting was always going to be about signals rather than substance. We're not really in a stage where we're going to get big signed agreements, going to get big, rollouts with this relationship. But basically, it is significant. And the Chinese Foreign Ministry wants us to read into the fact that for this premier's first trip abroad, he has chosen Germany as the first location. These are Merkel-era level talks that were between the German government and the Chinese government. But this is not the Merkel era, and this is the backdrop of these conversations where Olaf Scholz and the government are talking about de-risk, 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 but wait, don't decouple. So there's also no full China strategy from the Schultz government yet. That is expected to come out at the beginning of July. And let's not forget the economic imperative here. The trade relationship between Germany and China is 300 billion euros. It's the biggest relationship for Germany. And for many of these companies, BASF, BMW, Siemens, they are still investing in China. So it's a lot of cake having and eating going on here. I was just at the German industry lobby event where I spoke to the CATL Europe CEO, and I spoke to another German CEO, and I said, hey, can we do an interview? He said, what do you want to talk about? Relationship with China? Maybe not. It's a little bit too sensitive right now.
Oliver Crook, it is not just in Germany, it is also in the U.S. Thank you so much for taking the time, and we'll be looking for more of your updates. Coming up, the market-moving events that you need to be watching. That's next in our trading diary, about 25 minutes into the trading session, just a bit lower. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Bloomberg The Open. We're about, 25 minutes into the trading day. What you could see is softness, 0.4% decline sticking in the S&P, although the NASDAQ has retraced a lot of those losses as the session has gone on. In the bond world, you have seen kind of a split field here with people looking for potentially more rate hikes, and yet all of the major benchmark issuances all lower on the day. You can see 2-year, 10-year, and 30-year all lower, led by the 30-year. Time now for the trading diary you need to be watching this week. FedEx earnings coming after the bell today. Fed Chair Jay Powell testifying before the House Financial Services Committee tomorrow. On Thursday, the Bank of England announces its rates decision, plus Powell testifies before the Senate. We'll also get U.S. existing home sales following today's incredibly hot data when it comes to some of the housing market starts. Then we round out the week with Fed speak from Mester and Bostic after what we have heard today from Jim Bullard. This was Countdown to the Open from New York. This is Bloomberg.
of the large Chinese technology companies, let's say Alibaba, Baidu, Tencent, they have gigantic market values and they're very prominent in China, not as prominent outside of China as obviously in China, and certainly not that prominent in the United States. TikTok, by contrast, is not in China, but it's gigantic outside of China, the United States and everywhere. What did TikTok do that enabled a Chinese-based company, parent company at least, to do so well outside of China?
We think it's challenging to build a global company in general, but the best ones we have seen so far are ones that take very consistent global learnings and adapt them to the local countries that they are operating in. So you need to be global and local at the same time.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Bloomberg Markets with Paul Sweeney.
We got a lot of green on the screen here, but the volume is light. This is a market that's much more optimistic or bullish than maybe central bankers are. 9.5 million job openings. What are people doing? Are they just sitting in Starbucks all day?
Breaking market news and insight from Bloomberg experts.
There's still some concern out there in the market that there is room for things to deteriorate a little bit more than what they're indicating.
As small and medium-sized businesses struggle, they don't present as much competition.
What are you guys thinking about hardware, software? How should investors approach this thing called AI?
This is Bloomberg Markets with Paul Sweeney on Bloomberg Radio.
All right, good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. Paul Sweeney, Jess Metten joining you here for the next 3 hours. Coming up, we're going to check in with Ira Jersey, Chief U.S. Interest Rate Strategist for Bloomberg Intelligence, get his thoughts on what we can expect from this Federal Reserve going forward. And then it is a Tuesday, kind of a merger Tuesday, if you will, since we were off yesterday. And what does that mean? Another deal in the pharmaceutical space. Sam Fazeli, he covers all the pharma stuff for Bloomberg Intelligence. He'll join us. So we got a lot coming up. But first, we want to just check in and get the latest on some of the news coming out of D.C. We'll get to that in just a moment. But first, we're going to go to Nathan Hager and get a Bloomberg Business Flash.
Yeah, we're starting off this holiday shortened trading week, Paul, with equities ticking a little bit lower after the S&P a 14-month high last week. We saw housing starts before the open surge last month by the most since 2016. Got a pretty interesting note out from our Markets Live team on the heels of that, saying that the signs of resilience in the housing market now could run up against the Federal Reserve's goal of tamping down the economy. And if that means an extended hawkish tilt from the central bank, it could weigh on risk assets. And add to that the question of whether this market is looking overbought. You can add Dennis Gartman, the former publisher of the Gartman Letter, to the yes camp on that question.
The market has what we commonly said in the last several months, bad breath. The number of stocks that are down for the year is substantively higher than the number of stocks that are up for the year, and only 7 or 10 of the stocks on the S&P 500 have accounted for all of the gain thus far. So yes, the market is egregiously, preposterously, seriously, almost comically overbought and due for correction.
And we check the markets for you all day long here on Bloomberg. The S&P 500 right now is down 21 points, or 0.5%, 4388. just short of the 4,400 level for the S&P 500 right now. The Dow Jones Industrial Average is down 194 points, or 0.6%, 34,103. The NASDAQ is down 43 points, a decline of 0.3%, 13,646. 9 of the 11 major industry groups in the S&P 500 are in the red right now, dragged lowest by energy and real estate on the heels of that housing starts news. The 10-year Treasury is up 9/32 right now. The yield 3.72%. The 2-year yield is at 4.69%. NYMEX crude is down 2.5% now, down $1.77 at $70.01 a barrel. COMEX gold is down 1.5%, or $29.30 at $19.42 even an ounce. The euro trades at 1.0915 against the dollar. The yen is at 141.59. Bitcoin right now is higher by almost 0.4% at about 26,800. You mentioned the merger Monday observed. Well, we are watching shares of Dice Therapeutics right now. They are higher by nearly 38%, with Eli Lilly buying the company for about $2.4 billion. It's a San Francisco-based biotech that's developing oral treatments for immune diseases. Eli Lilly's paying $48 a share in cash, and right now Dice trades at $46.61 a share. Eli Lilly, by the way, is higher by 1.33%. That's a Bloomberg Business Flash. Bloomberg Markets is on with Paul Sweeney and Jess Menton.
All right, Nathan Hager, thank you so much. We appreciate it. Jess Menton and Paul Sweeney here in the Bloomberg Interactive Broker Studio. Jess, good morning. Welcome.
Happy Tuesday,
Happy
Paul.
Tuesday. Yeah, nice short week here. And today is day one. We're streaming live on YouTube.
How exciting is this?
Exactly,
I love it.
Exactly. So that you can see us in addition to hearing us. How fun is that? You can find our channel. Just search Bloomberg Global News on YouTube, and you'll check out our YouTube channel streaming the Bloomberg Markets here. A lot of news out of Washington, D.C. today on the legal front. I mean, we started off the day. Looks like President Trump faces an August 2023 trial in the classified documents case.